Okay, hello and welcome to our latest urgent market update video for Tuesday the 29th of October. And as you're probably more than aware now at this stage, we've got an awful lot of very, very important news events, both individual news, sort of scheduled events, and also more very significant macro geopolitical kind of dynamics as well playing out for these financial markets. So we wanted to put this short video together just to indicate to you what are the most important news events likely over the next 8 days. And at the end, we'll just reference a little bit in terms of what our thinking is going into this particular event and how we're potentially looking to trade it. Okay, so this is going out on Tuesday the 29th of October. So let's, as we always will, start with our risk warning. Take a brief moment to familiarize yourself with our risk warning currently up on screen. Do feel free to pause this video if you need. Okay, so let's get straight into it then. Let's start with looking at Forex Factory, and we'll break down for you some of the major news events that are scheduled over the next 8 days. So we're starting today, Tuesday, the 29th of October. Now this afternoon, we will be, we'll get consumer confidence number. It is important to gauge the relative confidence of a consumer in any particular economy to gauge its relative strength and weakness. So we do get that event today. Things have been on the weaker side for the US economy. We've been above 100 fairly consistently. And the expectation and forecast is for, I suppose, consumer confidence in the US to just weaken ever so slightly, nothing overly significant. Now, as well as that, 2 p.m., and don't forget, a lot of the times of these particular events are an hour earlier than normal just for this week alone. And that's due to the daylight saving time shift over the weekend for the Euro zone and the UK as well. Times go back to sort of normal timing. Normally there's a 5-hour time difference between the East Coast of the US and the UK. For this week only, it's a 4-hour time difference. So that's why these news events are broadly normally at 3 p.m. are currently at 2 p.m. for this week only. So JOLT job openings. This is the first of 4 very significant news, jobs-related news events, which we need to be, of course, mindful of. And this is to do with how many jobs are available in the US economy. And as you can see, we've been on a very significant decline since the peak in COVID. This has been pulling back from 11 million jobs available to 8 million jobs. And we're expecting really prices to be around that 8 million number, 7.98 million. So softer than previous, probably significant highs as a result of COVID. However, that 8 million number is significantly higher in terms of number of jobs available for the US economy than we've seen historically. Let me see how far back I can go. Yeah, so 8 million jobs available is really at record highs if you just removed the uniqueness of kind of COVID and what that meant for demand for employment. It absolutely went parabolic, and now it's reverting back to some sort of reasonable number, which still exceeds the number of jobs available historically. So we're still in a really good place from a jobs perspective. That's the ultimate takeaway. Now, in addition to the US, we're going to focus primarily on the US related news and the UK primarily, but there's a lot of other central banks, central bankers, should I say, from the Swiss National Bank and the Bank of Canada. We've also got very important Australian inflation numbers coming through with German inflation in there as well. Again, SNB chairman speaking to markets. However, we're going to predominantly have a strong focus on the US because that is likely to drive sort of the global markets as well as the US related markets. So Wednesday, tomorrow, Wednesday, the 30th of October, again at the earlier time of 12:15 and 12:30, but we get ADP. This is the second employment-related number that's due to drop this week. It's the second of 4, don't forget. And we can probably, these are private sector numbers, the ADP numbers, we're probably expecting a little bit of weakness. Some of these job numbers have been, let's say, erratic to say the least. A little bit more stability on the ADP side of things, as opposed to perhaps the non-farm payroll stuff. But you know, this 110, we're projecting kind of lower numbers. Maybe a little bit of weakness on the jobs, a little bit of weakness on the ADP. We shall see how these numbers play out. But we do have our consensus in terms of forecast, and we'll see if these news events come in better than expected. We'd probably expect to see a bit of a positive market reaction. And if this number comes in weaker, then we'd probably get some sort of negative market response. And all of this links back very carefully to central bank rate decisions, which we'll have a look at in just a second. So on Wednesday, we've got ADP and advanced GDP numbers. Again, other central bankers talking the markets would be quite important. Manufacturing PMI numbers out of the Chinese economy. Again, on the struggling side of the dynamics, above 50 represents expansion, below 50 represents contraction, and we're just sitting at that 50 level as things currently stand. On Thursday, we do have an important BOJ rate decision, unlikely to raise rates. We've now got sort of political instability for the Japanese economy with their elections over the weekend just gone, so we're not really expecting the BOJ to be really quite proactive at this particular point in proceedings, especially when, you know, we've got the election, we've got the FOMC coming down the tracks next week. So Thursday, sticking with Thursday, we then move on to unemployment claims. So we'll see if there's any kind of further fallout from these weather-related with these hurricanes that we've seen in the US, and how that's likely to impact these financial markets through, you know, increase in unemployment numbers, for example, like we've seen a couple of on a couple of occasions now over the last couple of months. In addition, we've got the Fed's preferred inflation number, core PCE price index numbers coming in inflated, which could potentially be a little bit of a concern for these markets in terms of, if we are seeing inflation beginning to tick a little bit higher, that may cause the Fed to really slow down their potential rate cutting dynamic, which would be quite significant again for these markets. So US inflation and unemployment claims on Thursday, and then we've pretty much got the big one. So we've got non-farm payroll on Friday. We had a very significant and very surprising non-farm payroll number last time out. Let me just zoom in here for you. So we were expecting 147,000 jobs to be added to the US economy, and we got 254. There's a lot of people that suggest that, you know, we're so far away from potential from the forecasts nearly every single month. There's clearly some sort of dynamic which is a bit of a problem in putting these numbers together, and how trustworthy are they is very, very debatable. We won't necessarily get into that because this is what the market do and will react to. So we're expecting 108,000 jobs to be added, and we've got ISM manufacturing PMI numbers on Friday as well, just to finish things off. Now, just from a scheduled news perspective, that's not the end of it. Next Monday, very little, a few bank holidays as well, and we've got that daylight shift, saving time shift for North America. So we're back to normal times from next week onwards. We'll be hearing from the RBA. And we've got two major news events of next week, which formulate a part of this whole sort of very important period for financial markets over the next 8 days. And that's, of course, US presidential election. It's going to be very important for markets to know whether we've got a Kamala Harris administration, which is kind of status quo, not a huge amount's likely to change, versus that of Donald Trump, where we're probably likely to see there's a lot of concern that a Trump presidency is a little bit more inflationary for market dynamics, which could therefore have a big impact on Federal Reserve monetary policy decision making as well. So presidential election, congressional election, and we may not get a solution to this straight away. Especially, it's very much expected to be a really, really tight race at this point. And, you know, we've seen how things can get dragged out in this with this type of dynamic underway. And we know exactly what Trump, you know, how he was willing to accept the result in 2020. You know, he was claiming all sorts of misdemeanors, really, and claiming that the election was fraudulent and taken away from him. So I think at a very minimum, it's going to be a really volatile event for financial markets. Now, again, that's not it from a scheduled news perspective. The last of these major news events would be next Thursday, November the 7th. And it's all about whether the Fed will actually look to cut rates. Now, we're expecting, the markets had expected 2 further rate cuts this year. Some are now advocates of just 125 basis point rate cuts. Will the Fed go with 250s? It's probably unlikely. We're probably likely to see more of a 25 basis point rate cut. But a lot of these news events in the build up to the FOMC will be really important in terms of Fed policy, monetary policy moving forward. And the markets are very, very likely to react accordingly to not these individual news events, but more so to do with a shift in potential Fed policy moving forward. Now, those are all the scheduled news events, just looking through Forex Factory over the next 8 days. Again, however, that's not all. We still need to be mindful of corporate earnings. They play a very, very powerful role. Let me tell you how powerful this is. Over the next 3 days, that's Tuesday the 29th, which is today, we're going to be hearing from Google corporate earnings, 2 trillion market capitalization. Let me scroll right down. So tomorrow, Wednesday the 30th, we've got Microsoft over 3 trillion and Facebook market capitalization of 1.5 trillion. That's not it. That's not all, should I say. You can see a huge number of corporate earnings due out. And on Thursday, we're going to be hearing from Apple and Amazon. Again, 3.5 and just under 2 trillion for Amazon. So why is this so important? Look at the other corporate earnings over the next 3 days. So let's put a little bit of context into this if we can. So let me go down to Tuesday, which is today. Sorry, that's Wednesday. I think I just scrolled past it briefly. So yeah, so we're looking at Alphabet. This is the first one of, and if you add up these 5 large cap, there are 5 out of the 7 Magnificent 7. We had Tesla last week, which excelled, and we saw a very significant rally in the Tesla share price. And we've got NVIDIA in, I think it's about 3 or 4 weeks' time. So we won't need to hear from that for just a little while. But we've got the other 5 of the remaining 7 And to just give you some stats, the total capitalization of those 5 companies is somewhere in the region of about 12 trillion. You can add it up yourself. So 12 trillion is really what's at stake. Now, over the next 3 days, there's an overall market capitalization of somewhere in the region of about 20 trillion. So you can see the 12 trillion for those 5 companies make up the vast majority of the corporate earnings over the next 3 days. However, putting it into context, overall market capitalization for the S&P 500 is in the region of 48 trillion. And as you can see, 12 trillion represents basically 25% of that overall market capitalization. So this is why now it's very, very important to understand the relative strength and weakness of the performance of these very, very small number of companies, because they play such an important role and is a huge weighting when it comes to the global indices, which is what we effectively trade, and we look for opportunities every day. So the relative performance of Google, Microsoft, Amazon, Apple, and these companies, the Magnificent Seven, the overall performance of these are profoundly important when it comes to the broader markets. Not just European indices, not just US indices, but also global indices as well, European stock markets, Asia stock markets. They're all taking this lead, obviously driven by this AI narrative, which underpins absolutely everything in these markets. And the question is, are we likely to get, if you look at this is investing.com, this is not a bad place to go and just have a look at earnings calendar, but you get the earnings per share, you get the forecast, you get the revenue numbers, you get the market capitalization, and you get further detail if you want to click into those. So you can get a very, very quick snapshot in terms of whether these corporate earnings are broadly positive, whether negative. If they're green, they're broadly positive. If they're red, they're coming in, you know, in some cases significantly negative, in other cases very, very minimally negative. So you can really gauge relatively quickly whether, you know, the overall earnings dynamic is broadly positive or whether it's broadly negative. And that's why over the next 3 trading days, so that's today, Tuesday, tomorrow, Wednesday, and on Thursday, the 31st, they'll be profoundly important and very likely to impact these markets in a very significant manner. So with scheduled news events, a lot of the news, we've got growth numbers in there, we've got inflation dynamics, we've got obviously the 4 major unemployment numbers, we've got corporate earnings, we've got the US election, we've got the FOMC. So can't stress how important it is to be mindful of these news events. So we can look at things like the S&P 500 and we can say, right, well, how are these markets going into this news event? And as you can see, really quite choppy is probably the first thing, but no clear direction. And you look at this price action, we're very close to all-time highs at the S&P 500. It's a really good proxy for the broader market dynamics. And we've got 2, 4, 6, 8, 10, 12 days. Over the last 12 days, we've shown at times really significant strength, followed by significant rollovers, strong aggressive selling, which then retraces. And then last Friday, we saw a really strong rally, very close to all-time highs, what ended up, closing in the latter part of the trading day, in a very bearish fashion. And then earlier this week, we've kind of gapped higher. We rallied. We couldn't stick with that buy trade either. It started to turn a little bit weaker. And today now, pure indecision. So this is not overly unusual going into such an important feature for financial markets. So the question is, how do we trade this event? Well, we do so very, very carefully. And we want to be quite deliberate in our decision making based on some of these news events and what they suggest about the overall growth of the economy. And we've got a couple of spanner in the spokes with the US election and what all these figures and corporate earnings, what they mean to the Fed in terms of monetary policy, interest rate decisions. will all feed into whether this market rallies, and may very well do very aggressively. We might start seeing new all-time highs pretty soon. However, if some of the data starts to build where there's more concerns than there is euphoria around these markets, then, you know, could we be open to a corrective move across these equity markets? Absolutely. Same dynamic for the dollar, same dynamic. Well, the yen's a slightly different dynamic because of this carry trade seems to be in full throttle, and I don't think the BOJ are likely to make any decisions just yet. So, putting all this together, we're gonna observe what happens, and we're going to make sure that we keep ahead of and have a broad understanding about the impact of some of these news events, and we'll look to trade them very strategically. And like I said, be deliberate in our decision making wherever possible. So on that note, when it comes to narratives, we're likely to be, we need to be a little bit flexible. We don't really have any huge clarity in these markets as things currently stand. Okay, so that's just a little review of the last 8 trading day, it's a bit of a review of the next 8 trading days, some of the major news events that are coming down the tracks, and what our view is. Because we've got such a sideways moving market dynamic going into the event, a lot of these markets are going to react to these news events as they unfold, and we'll be able to hopefully react accordingly. So of course you may have questions about anything covered in this particular event, so if you do feel free to email us at support@thelivetraderoom.com, and we'll get back to you as soon as we possibly can. So on that note, thanks very much for joining us. Do stay tuned for our next video. And if you are interested in learning how to trade the financial markets, you can just go to our website at www.thelivetraderoom.com, and do feel free to connect with us then. Great stuff. On that note, thanks very much for joining us. Do take care of yourself, and we'll speak soon. Bye for now.